Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Denitsa Sakova. Denitsa, what are you looking at?
Let's start with CVS. CVS is up about 3% after the company raised its full-year profit forecast and said earnings would rise in 2026. The numbers are pretty strong. Adjusted earnings would be as much as $7.20. This is higher than what the street was expecting. The company also said it expects a profit this year of about $6.60. This is a 5-cent increase from its previous forecast. Overall, the outlook suggests that CVS is navigating a pretty tough environment very well. The company is actually up more than 70% year to date. It has a new CEO that came in October 2024. So we're seeing quite a turnaround there. Of course, the pressures are still there. Health insurance plans are facing greater government scrutiny. Drug benefit managers are changing their business practices. So there are so many things that the company had to struggle this year. But very strong day today and off to ending a pretty strong 2025.
Right. What's next?
Let's look at Pepsi. The company is actually down about 1% today. The ticker is PEP. It's coming off that agreement with activist Elliott Investment Management. So two big changes. They're reducing their lineup by 20%, lowering prices, and then there are also some language about them pairing its workforce. Pepsi has been down this year. There are so many trends that the company is in the middle of. There is softening consumer demand, rising costs, tariff, shaking investor confidence. So there are many different forces weighing on the company. Even this move to cut costs is not helping. It's part of an early agreement with Elliott, which we remember, it's built up a $5 billion stake earlier in this year. It's been working on all those changes, but so far we're not seeing very optimistic reaction. Pepsi has been trying to go into more fiber, protein, healthy drinks. Obviously, consumers have been turning to more healthier options, and Pepsi has been trying to catch up. But so far, the stock has been struggling this year.
Yeah, we see it lower at the moment. All right, last one.
Quick index effect. RS Management surged as much as 9.4% on the news of it's going to be included in the S&P 500. Ticker is ARES. The stock is up about 8% now. The company will replace Kellanova, which owns Pringles, Cheez-It, and all that. Interesting analysis from Bloomberg Intelligence. RS addition to the S&P will boost the passive ownership toward high teens. Currently, it's 15%. We all know this is very important, and clearly investors are excited about the increased passive ownership. RS is really big. It has a market capitalization of $54 billion. There are very few companies with that size that are not part of the S&P 500, but clearly the company is joining now. And there is a big gap between other private equity and private credit managers, and RS is definitely jumping higher on the news and almost turning positive so far this year.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.